No, because we're talking about Tuesday. This is intraday fundamentals on Tuesday. So we said the previous session, we gapped up after the sell-off.
Trump remarks that full-scale tariff war with China is unsustainable, how it gave more certainty to the markets, and that's why we had this kind of sell-off into gold, right?
Yeah.
To be exact on why this was happening, actually, this big sell-off on the
It's
gold.
more of a description. Okay, what was happening at that day, or the weeks prior, right?
Correct.
Do this. I think it's always a little bit nerve-wracking, but all of us have already presented a playbook. It's a nice opportunity to review and do an even better job, but I think the heart always beats a little faster in the moment prior to it. Don't you guys think a little bit?
Of course, it's also the second one.
Prepared well, so we're expecting to do good.
Jeff is pretty scary already, but Bella, we haven't faced Bella, so let's see.
I did in the
You
first
did,
one.
you did. You're courageous. You're courageous.
Second's a charm.
All right, let's do it. All right, we're going to do a playbook trade. This is an exercise that you need to do every day. This is an exercise where at the end of the day, you should think about a trade that you want to deconstruct that really worked well. This is a trade that either you made and did really well in that you're going to deconstruct, or you spotted somebody else make on the desk, or you spotted just in general, this is a trade that you could have been in. A trade you could have made a lot of money in. A trade that makes a lot of sense to you. Okay, and so every day you do what we call a playbook. All right, this exercise, this playbook exercise is you deconstructing essentially the best opportunities that you're seeing day over day. And this, when you do this, this is the building blocks for you creating your business. All the playbooks start to collect, and you start to build this database of playbooks, and this becomes what you use to be able to build your trading business. These are the trades that you're eventually going to start to focus on. Okay? What the playbook helps you to do is, while you're in real time, you're not, unlike other developing traders, sitting there saying, should I take this trade? Should I take this trade? Should I take this trade? I don't know if I should take this trade. Are the variables there for me to take this trade? Is this enough? Should I take it? You've done the work beforehand to say, if I spot a certain trade in real time, I've playbooked it, I'm going to take it. You have done the work. You've done almost all of the work prior to having to make these decisions in real time on the fly. Does that make sense? I do not want you in a situation where you're doubting, you're fearful, you're uncertain, you're confused. Markets are too fast. Entries are too important for you to be thinking about, should I take the trade? Is this the right one for me? No, you're spotting. I'm ready to go. This is a trade in my playbook. I'm going to take it. It helps you to be more selective. A lot of times you're sitting there on your trading desk and you're like, I don't know if this is a good trade for me. I don't know if this is a good trade for me to take right now. I don't know if the variables are aligned right now for me to take it. I don't know if enough of the variables are there present for me to actually take this trade. Well, you've already done that work by doing these playbook trades. Lots of times you're not sure if this is an A-plus trade for yourself. When you do the playbook exercise, you ferret out the best of the best trades and you create an A-plus trading playbook for yourself. And so again, you're not confused, doubtful in real time. You say, no, this is an A-plus trade. This is a daily chart breakout on high volume with a news catalyst. That's an A-plus trade in my playbook. And I'm going to now take it with a lot of size. I'm not doubting myself, should I take it with a lot of size? No, it's an A-plus trade in your playbook. Your job now is to pull the trigger. You've done the work, okay? It helps you, when you do this playbook exercise, to make sure that your entries and your exits are crisp, The thing that we do really well here at S&B is our entries and our exits are terrific. We are better than others in our space on the street at entries and exits. This allows us to trade bigger. This allows us to have higher win rates. This allows us to be able to have better risk-adjusted returns. I think when you actually guys started, there was this period of time where I was like, yeah, haven't made money for, I think it was like 5 days. We like didn't make a lot of money, and I was like, yeah, I don't know, and now we're sitting here. You guys have been here for 4 or 5 weeks. I mean, we're up. There's 3 days left in the month. We're up $26 million this month from the New York City office. Okay, and that's because we've made a lot of money in our A+ trades. Our guys have a playbook. They are executing on their playbook. They've done the work prior. They deserve, collectively as a group, to be up $26 million. They deserve it. They've done the work. And so, yeah, the whole genesis of that, but there's no $26 million for the month before that. One of our guys is up $12 million for the month. Several guys are up over $2 million for the month. I think there's 7 guys up over 7 figures for the month. So this is not by accident. These are the things that they're doing. The playbook is an exercise that we're modeling for you to be a successful trader. Does that make sense? We teach you guys the things that move the needle. There are things you do every day to give yourself an opportunity to make 7 figures in a month. That's pretty cool, right? And it all started by those guys doing an exercise like this. All right. So I don't know. You guys are. This is now. This is like a final exam here, right? Yeah. So you guys learned a bunch of stuff. So now we're putting you in the hot seat to see if what we've been teaching you've absorbed. There's a certain score you've got to meet. We're going to go light on you guys because you guys are interns. So you gotta be 8 out of 10, 80 out of 100 on all these different variables, which we'll talk about. The big picture, intraday fundamental, stock selection. We'll get to all of them. So introduce yourself. Tell us where you are in your trading career, and then let's get to your playbook trade.
So my name is Thomas. I'm from Brazil. I'm 25 years old. I started off as a lawyer. However, during COVID, I actually fell in love with the markets, discovered trading about 8 months ago, and after that I knew that it was something that I wanted to do with my life, so I got the life savings that I had. Kind of came here to New York, was very fortunate to be accepted into the internship program, and I just have to say that this journey, without these guys in the room, Bella, Jeff, all the mentors, it has been amazing. So I'm just glad to be here, and an honor to present the playbook with these guys, the last one of the internship, so I'm very glad.
Thank you, Thomas. My name is Alkis. I've been trading for 5 years. I'm and more actively intraday for the past 2. Currently, I had the privilege and chance to be here on the internship for the past 2 months, and it has been such a great journey. It has really enriched my knowledge, and I'm really looking forward to level up, to present to you our playbook for the gold that we saw last week. And I would also like to pass it on to Christian, with whom I had the pleasure as well to work together for this playbook.
Thanks, Alkis. My name is Christian Davidson. I'm from Tucson, Arizona, and I've been watching the markets for a couple decades. I was watching the internet boom as I was running my little healthcare business. I used to go to workshops on trading when you had to fly there and go in person because there was no internet to learn these things. But then raising a family and running my businesses, and finally I came to a point in my life where I really wanted to do this more professionally, really focus on it. And so I'm really thrilled to be here and to get accepted into this internship to take my trading to the next level.
So the trade we're going to present today is the overextended short on gold A3. This is our photo there. I think you can see it. Yes, we are all here. All right.
Perfect. So welcome to the breakdown of the overextended short trade on October 21st. This playbook actually covers day 3, the setup of following a parabolic move, and let's examine what happened technically as well as fundamentally and how we approach the trade. So to begin with, the context here is we compare the yellow line is the gold, the GLD, and the black line is actually the DXY, which is a dollar. What we want to see is, to begin with context, we compare the US dollar index with GLD because a weakening dollar contributed actually to the gold's run up, but a snapback in DXY also hinted at a possible top. So watching this inverse kind of relationship between the two, which is well known, was a key to spotting early exhaustion signals on gold. We have also to mention that there were quite a few factors that played a role to see this kind of diagram and this kind of inverse kind of relation. It's first of all the central bank's demand, because a structural shift due to sanctions made this from the beginning of the year, and especially since April that we have the tariff announcements. We have also the credibility, which means that in the international markets they wanted to have a reserve diversification, as well as protection against repression and other kind of geopolitical realignments, as well as the de-dollarization thesis that exists among the BRIC countries. So on a bigger picture here, we're gonna examine also what was the picture on SPY. As we see, we zoom out to the SPY, the S&P just rebounded sharply from left to right from the 2.7 correction, forming a clear range, and of course on October 21st we were testing the top of that range. There was risk appetite which was returning to equities, which put pressure of course on safe havens like gold, and that was one of the signals that we have to keep in mind. I want to say that overall the S&P 500 as well as the Qs are important because they are tracking the overall risk sentiment, and historically gold acts as a counter-cyclical hedge, rising when the stocks fall. However, recent trends show these correlations shifting, and they require a real-time analysis. And an example is what happened in this specific incident, that we saw both gold and the Qs and the SPYs rising at the same time to all-time highs. And one last part, I don't know if I mentioned the previous on the previous diagram, was also that after crossing the $4,000 per ounce, that was a psychological level as well for the majority of the institutional investors, banks and so on, that we even see reaching 4,400. With regards to the Q, we see a similar image with the one we saw on the SPY. So Qs had also rebounded, breaking out from a trend, a short-term range.
All right, so are you guys making a trade based on technicals in gold? Are you making a trade based on technicals or a news catalyst? Are you making a trade based on technicals and or a news catalyst?
And or. Because we have on the specific days there are breaking news.
So show me. So I like how you talked about the $4,000 technical level. So for this trade, walk through like the biggest levels that are important for this trade we're going to talk about. Is there anything about the big pick, the Qs or the SPYs that are going to help or hurt this trade?
I think yes, because we see that as fear rotated from the one, it moved money to the other. So there is a direct correlation on how the capital is moving around, and out of defensive assets like gold, we see that it's being moved to
Good. And okay, great. So you're saying, so to that point, is there anything? Are there any really important levels in SPYs or Qs or some of the other that you want to point out to us that are going to impact this trade?
I think the important was that, as we mentioned on the Qs and the SPYs, during those days, the 21st, it was on the range of the all-time highs.
Okay.
That signifies actually the fact that there was kind of a sell-off, and that's why the Qs and the SPYs continued to be on an uptrend.
I think in a sense it is important, yes, but for the gold trade, I think it's an animal of its own. Like gold would have unwinded or could have unwinded if SPYs or Qs were in the middle of the range or on the top of the range. At least, of course, we will never know. However, the characteristic of
And
gold.
so that's
is
why I
always-
asked that question before. Is that because this is more of a news catalyst trade?
I think it's both, because we have the news on that day
Yep.
of the unwind, Trump easing the tariffs rhetoric. However, there was an acceleration right before it happened.
Exactly.
There's going to be a big technical level in gold.
Yeah.
Okay, got it. Okay.
And if I may add to Thomas' point, this macro sentiment that we are discussing, actually, this macro sentiment shift reinforced the idea that gold was overextended.
Okay, got it.
So, with regards to the VIX, I think here we just need to say that VIX continued to decline after the tariffs, and we signaled the reduced market volatility and risk perception, and as fear subsidized capital started rotating towards other things, so more defensive assets such as the gold. That's why we saw this shift from the beginning of the year. From the one to the other, from gold increasing, and of course, and as we mentioned earlier, we see also that the 21st, just before, there was the highest VIX since May. So this is also one important element to keep in mind, that when we saw the big sell-off that happened on the 17th, which was the Friday before, it was signaled with a very high VIX, and that signal that we also take it as a confluence. We take it as a confluence for this trade.
If VIX spikes, there may be a flight to safety and more likelihood that people may buy gold. What is your explain? Run me through what you're saying there.
Okay, so we do, as we said, that there are two elements here, because the one element is that yes, they would normally run to a safer asset like gold. However, we see that recently this is not the case, because there is a risk-on appetite in the market, and that's why we saw that they were also the SPYs and the Qs were at all-time highs.
Okay. All right. Let's go. Let's move on.
All right. So this is more or less talking about what Alki said. So we had the reclaim of the area after the tariffs. We were experiencing, we experienced a huge plunge on the SPY and the Qs on that on that Friday that the firm, I think, did really well, right, on the breaking news, Trump's tariffs. So we were on top of the range on both of the bigger indexes. However, as we discussed, gold is an asset of its own. Even though they're more correlated than they were in the past, this is just the context of we're trying to break the new all-time highs. Gold is at all-time highs. The market is euphoric in general. So this is a bit of the context of why this unwind actually becomes even better, in a sense.
And here we need to also check some intraday fundamentals that were quite significant. First of all, I will start with the catalyst, which was that President Trump's remarks that full-scale tariff war with China is unsustainable, gave more certainty to the markets. So there was this kind of shift, as we mentioned, between the gold and initiated this selling of the gold. Second of all was the previous session. We gapped up after the Friday sell-off, which gave an entry to new shorts and reset the trade from the beginning. So a lot of people who had taken already swing positions had to get out because their stops actually were triggered. So this reinstated and reset the whole trade from the beginning. And we have to say that this specific day was the largest single decline in a day over a decade. So it was almost 5% drop in gold. It hadn't happened for almost a decade. And with regards to volume, another big fact is that it was twice as much the volume compared to the average volume of the previous 20 days, of the average 20 days. I think this combo between the setup, the catalyst, of course, which was the remarks, as well as the technical levels that we were on, as well as what had happened in the previous session, really gave the push to have this kind of trade, which was the largest, as we mentioned, single decline over 5% for gold within a day, which is huge.
Okay. So going a bit into the technical analysis of gold. Gold is a commodity that it's very rare to make really big moves in 1 year. It happens very cyclically, and year to date until more or less May, we had a 31% increase in gold, which is already enormous. I remember everybody talking about gold. After that, we consolidated in a wedge for about 4 months. So you can see the price coiling up, comprising, and what does that do, right? This is a classic breakout pattern and stores energy for a big breakout. The longer that you consolidate and you accept the price at a certain level, usually that leads to a higher breakout, right? So we were actually here in the internship when gold broke out, which was a huge trade. You can see it was kind of in the beginning of September. After the breakout, we had a huge...
And so just one question about the consolidation.
Yes.
What do you notice about the consolidation that also gives us more confidence it's going to work?
At least, in my opinion, it makes higher lows into a resistance. So we have a pretty clear defined resistance there at 315. It stays more or less flat. However, it makes higher lows. So it starts testing that range and coiling even more. If it was a big range, just a box, it could break to either side, right? There's not much conviction in the market. But it's clearly trending a bit up in that sense.
And if I may add, towards the end of the consolidation, we see that the spikes, the range gets smaller and smaller. That creates this kind of boost for the breakout.
Exactly.
Yeah, so trading principle, go back to that chart, trading principle number 1. There's actually two really important principles here. One, that's a great looking chart pattern for which we all need to study. That tight consolidation, dead on, that we get really good trades after tight, long-standing consolidation. Something's got to happen after this. And second, great job, trading principle number 2. Yeah, those higher lows up against resistance makes it more likely for it to break out, and there's an excellent observation that you make there. Okay?
Thank you, appreciate it. So we had that breakout, and something that we have discussed here is that we can usually expect or a measured move from the base to the breakout level. Actually, sorry, from the beginning of the move to the consolidation, or we can expect 2 measured moves of the flag or a wedge, whatever you want to call it. At that point, in a month and a half, we did 3 measured moves in kind of a parabolic way, which is something that it's kind of astounding in a sense. So we rallied 27%, which is 3 measured moves, and mostly we held the 10 SMA, and the 5 SMA we only closed it once below. So really strong trend, really parabolic move, and that actually coming a bit back in time, right? So we had the big unwind October 17th, and 2 days prior, we had 2 gap ups. So what do we see usually on very late trend and possible overextensions? We went through with Brandon, went through with Garrett, is that at the end of the trend, usually there's an acceleration, be it in range and in volume. And you can see two gaps, volume expands, and in the last one, the biggest gap and the biggest volume day. So we have a few theories about why that happens. Maybe we'll talk a bit later. However, you can also see something that Justin pointed out, which is a really good tip, is the distance of the price from the 5 SMA. 5 SMA is a really tight SMA, right? Usually you can see during the whole trend, price follows the 5. But at the end, it just gaps above. So a correction is coming. We don't know it's gonna gap more, it's gonna go, but it's priming for that.
So we teach as a team. You have noticed that here. And so what I really like about that is you've now mentioned 4 people, but recently you mentioned, Justin. So you're also learning from Justin. And you're also learning from Garrett. And obviously Jeff as well. But I like how you're taking a little bit from each of them and remembering important parts and then making them work for this trade. So that is why we teach as a team.
No, it's something, just a little deviation. The mentorship that we have here and the quality of real traders, 7, 8.
So we're putting in front of you guys real traders to talk about real trades that they're also involved in. And you're not learning from one person, you're learning from a lot of different people. So Garrett is focusing on more indicators and technicals, and Justin does his thing, and Jeff does his thing. So that's important for us. All right, great.
Exactly.
And one more point, if I may add, Thomas. This started also in the beginning of our internship, so it was an 8-week kind of breakout.
Yep. Okay.
How long have you been here?
8 weeks.
Okay. Are we coming towards the end of your internship?
Yeah, that's
This is the last week. I'm going to be so sad to see you guys go. Oh my God, what are we going to do? So keep us here. I like that. All right, so that's great. So it's been 8. Yeah, it's been 8 weeks.
Yeah.
Same as the breakout.
Well, let's see if you guys have how you've learned. We should get some points on the board. So you got to get 8 out of 10 on each of these variables. So big picture, 9 out of 10. I would have loved for you to have said something about how gold moves in relation to VIX. I think that's like a pretty interesting area of study. Look, you're doing an internship, but it just felt like that was such an obvious place that I thought you were taking me. So that's, for the future, think about that, but good on the big picture. Intraday fundamentals, 9.5. Good job remarking on, what I really liked is how you talked about people were going to be offsides potentially in this upcoming trade, and you were thinking about how people were positioned. I thought that was pretty sophisticated, and obviously you did a good job pointing out the catalyst on the Trump tariffs. And then we're still doing technical analysis. So we got a couple up on the board.
All right.
Thank you, Bella.
So something that was
So far so good, but let's not blow it, okay? Let's not blow it.
Something that was very interesting on the gap up day, the last gap up
We
day.
may not give you guys those. Those are nice shirts there you got there. What are the SMB Capital Fall Internship? Those are unveiled for the first time.
Very nice, thank you.
You may not get those shirts if you mess up now. All right, good luck.
I hit mine already, so it's all right. So something very interesting that happened as well with MSTR and other overextensions that we covered with Brandon. We had the gap up day, and in the post-market, we still run up. So we're running up. That shows extreme FOMO in a sense, or could be as well somebody blowing up. Is another thesis, right? The thing is, when the market is going up parabolically, we saw a huge increase in options in call buying. So what does that mean, right? The dealers have to sell options and they have to hedge by buying equities as well. However, that comes to a point where people are no longer buying options, they're selling their options. So the dealers have to unwind and buy the options back, and then they start selling. They're trying to remain delta neutral, right? So what happened? We opened up gapping down. It already felt different, right? What we've been seeing is complete strength, but now we're seeing the market kind of frothy, weak. We gapped down, we started going down slowly in the pre-market, a bit of a dump, kind of at 8. We rebounded to VWAP at 9, and then we had the unwind on Friday. This, however, it's something that I was talking to Jeff. It wasn't clean. The first move was clean. I think a lot of people nailed the first move. However, there was a huge bounce to VWAP, didn't follow through, again went to VWAP, and then it did, bounced again. So I think a lot of people were expecting a cleaner move. However, it was very difficult to trade the second part of the day. And I think this is one of the reasons why after that we had a gap up. People covered. I was like, okay, it's still uncharted territory. This is a bit weird. I don't know if it's the best possible scenario. But one thing that's interesting is that the gap up has lower volume than the unwind day. I think that's expected. However, it's not a crazy volume. It has kind of the same volume as the day prior to the unwind. So in our thesis, it's more short covering than real buying. And what happens, right? If it's just short covering, not real buying, most probably the price is gonna come down. And what happened? On the day after the gap up, we gapped down. So we gapped down close to 3% already in the morning. We had, of course, gold is traded 24/7, basically 24/7. So we have Asia session. We have the Asian session, so it was already trading down in that sense. We formed a really nice pattern there, which
I just want to point out something that you said, which is really savvy, and I would encourage, you guys are doing this in this room, but anybody watching this, I would encourage you to recognize what's really being said here. It's a super important trading principle, and it's the difference between traders who think they need to figure out what a stock is going to do, or what a product is going to do, or what a market is going to do. I need to be able to predict where gold is going to go. I think that's the way most people think they need to trade. What you're doing is what we do here. Is we kind of admit we don't know, which is okay. And I'm sure some people who are watching are going to be like, what do you mean they don't know? They've got to, how could they not know? What's wrong with those? They're stupid. I'm not sure anybody really does know. I think a lot of people pretend they know. Some people probably do figure a lot of this stuff out and they're super, super smart. But what we're saying is there's another way. There's a better way. There's a more consistent way. And what you're focusing on is, what are people doing in the marketplace? Who's buying and who's selling? And what's likely to happen next based on prior buying and selling? And me noticing that can give me an edge to figure out what's going to happen in the short term as short-term traders. And so I loved how you talked about prior positioning of certain players in marketplace. And again, you're doing that again. You're saying, I don't know if this is sustainable, this move, because the volume wasn't that great and because I didn't think it was real buying. That's really good. That's really good.
So this is a pattern actually that Lance came from Lance and Jeff taught us, which is the bouncy ball prior tidal wave. So we basically, it's the breakout of gold but inverse, right? So we're forming lower highs into a support area. And this was a moment that sometimes we come here early to trade small cap squeezes, as it was another playbook. Shout out to Brian as well, great playbook. And we were looking at it because gold was gapping down 2%, 3%. So what's happening, right? At that moment, it went down and the bids just weren't there. However, it's pre-market, right? Things can change. But this set the stage. As a 390 level, it's a psychological level, and it acted as support after resistance as well in the prior day. So it was very telling that right before the open, we were at the lows of the pre-market, and after a gap down, after low volume on the gap up, things were just setting up for a down day. So we were looking at it. Me, Jeff, Jackie, we traded this live. So we're gonna come at least for the second part, the trade strategy. So Alkis, I think, did a terrific job explaining the catalyst and what was happening in the macro scenario. So a weaker dollar, lower yield prospects during the year, right? So it could lead
So I just want to go over the intraday.
Yeah.
I just want to go over the technical analysis part of it. All right. So the daily chart technical analysis is it's overbought. Is that what you're saying?
Yeah.
And then the intraday technical analysis is we're going to use this level from the pre-market, right? We're going to use this 390 level from the pre-market, and we're going to use the fact that we're weak and we're continuing to be weak. So we're using that higher time frame chart, overbought, unsustainable levels, and we're saying intraday, we've got this important level, and our price actions is negative,
Yes.
right? Okay, so we're putting those two things together.
At least as well, I remember I was like, can this go even lower?
Yeah.
at some point, because we already covered 2.4 ATR in the pre-market.
Yep.
So that was one of the things that also affected the risk rating.
Yeah. I just want you guys to be, so look, on a scale of 1 to 10, you guys got to get 8 on technical analysis. I think that's a 9. I would say to you that you do just want to be cleaner and clearer about the best trades for us on our desk are when we take a look at our daily charts, our longer term charts. We call them daily charts for the most part because we're active traders. But we look at our longer term charts and we spot potential opportunities. Gold's overextended. All right? That's us using our longer term charts to spot an opportunity. And then we hone in, all right? We tighten the dials and we look at the intraday and we look for a spot intraday to put on our trade. We look for the intraday to be confirming our longer term chart opportunity. And that's how we make a lot of money. We make a lot of money on breakouts. On the daily chart, something needs to get above a certain level. It does. Intraday, here's another important level that is in the same direction. If it got above there, would be significant. It is. And then we swing the bat hard, as we say. We swing the bat hard. If you see it, swing the bat hard. All right, and so a lot of times these technical trades do provide the opportunity for us. Okay, so I would like for you to be clearer and crisper that this is one of those, just kind of the mirror image of it. This is on the short side, right? Mm-hmm. But we make a lot of money on these trades. Long-term chart, intraday chart, aligned. Let's go.
Let's go.
All right, so 9 out of 10.
All right. Yeah, a significant level that we're going to talk about in the trade strategy as well is the 385 level, which is marked, that line, which is the prior day low. So we are already next to the prior day low, which is something that hasn't happened in 6 days, 5 days actually. Exactly. So we haven't touched the prior day low in 5 days. It's going to be the first time since then, after an acceleration, after the huge overextension. So let's go for the trade strategy. So the weaker dollar, we had all the talks about higher inflation that drove gold prices higher as people try to use that as a hedge, right? So we have heavy momentum, heavy call buying, dealers have to hedge against that. So in a sense, what happened, right? I don't want to get too much into the technicals, but the dealers are short gamma. That means they're selling a lot of options. At the end of that move, people maybe think it's overbought, right?
Exactly.
They're already too much in the money. They're not buying more out of the money options or futures, etc. So they start dumping their options. So the dealers have to flip. They have to buy back the options. They have to create liquidity, right? So they buy back the options and they start shorting the underlying as a hedge. So we think that was one of the unwinds. Of course, with the news, the de-escalation, we saw every time Trump de-escalated, gold had a hit down. Every time he escalated, gold rose. So this was two things. Of course, there are many more factors combined that led us to this moment. After the gap up, we gap down again, super weak. So a few key levels to watch. 385.
So I just want to give you something to think about when you're trading gold. So first of all, gold is almost always a terrible product to trade intraday. Okay?
Why is that?
And I'm going to explain to you why. All right? And the reason why is because there is a tremendous amount of hedging that's going on in gold that has nothing to do with whether or not people think gold is going up or down. It's just part of the way people take on and put on and take off risk for their huge portfolio, okay? Around the world. So you get a lot. So to trade that intraday with all these players doing stuff that may or may not be related to gold, the underlying, just makes it messy. You know, somebody may just need to take off risk in their portfolio and use this as an avenue or part of an avenue that at a certain period of time that just, how are you supposed to know that? So it's just usually just frustrating. It's like, yeah, go ahead.
Bella, isn't it a bit of oxymoron, the fact that on the one side you have gold as a safety haven, as a vehicle in the long run, and then at the same time you see this kind of cyclicality during the intraday where in the Asia they buy it, and then London opens and they sell it, and then New York go, which doesn't make any sense, right? In the longer time frame, if you think about it. What happens on the intraday.
And that's why I'm talking about it's around the world, right? So you've got the London Open, you've got the Europe, you've got the Asian market to think about. We've got our markets opening up. It's messy.
Yes.
But it also recently has lent itself to, in markets, people have to own certain things because they're going up. And in markets, people have to overown products like gold, which lends itself to some pretty good mean reversion trades. The people that are just long for reasons why it's just higher. We're long at 430 because somebody bought at 428. We're long at 432 because somebody bought at 430, and I've got to buy. Like, there's just a lot of people in the marketplace who just have to buy. But then when things start to go down, they also have to sell. Yeah. They can't be left behind, and then they can't lose too much money. Does that make sense? Mm-hmm. Like, hedge funds are not always as sophisticated as they're given credit for. You just, if something is up a lot and the month ends and you have to explain to your customers what you own and don't own, and gold's on a massive run and it is considered this play to safety, you got to explain to people why you're under positioned in gold, and you don't want to do that. And so there is a part, chasing is part of our markets and why it always gives us good opportunities on the long side while trends are in place, and then when we see the turn, to take advantage of that. Does that make sense?
Yes, absolutely. And year to date, if it is above 50%, I mean, the hedge funds or the market makers, of course, they would like to do profit taking, especially towards the last quarter of the year.
Yes, and Dr. Steenbarger talks about that a lot, which is they also want to get paid.
Yeah, for their bonuses, because
they want to lock it in. They don't want to lose money right now because they're sure they're doing very well.
All right, so we had the 385, which is prior day low. 390, which is pre-market support, which we broke with the bouncy ball. 373, which is a higher time frame support, right? So what do we want to see? We want to see a lot of volume, a lot of liquidity, and a fast tape. Usually GLD, it's not fast. The tape is very slow. It's a bit spready, but on the overextension day, it was very liquid, low spread. So we want to see the same thing, at least above 300K shares a minute in the first few minutes, which is what we had on the overextension day on Friday. So a bit of our plan, right? The thing was, of course, it's easy to see after the fact that this was maybe an A opportunity if you were to play it right, but it was down a lot, 2.4 ATR. You know, as a developing trader, you're like, okay, is this really an A opportunity? How far can it really go? We already had the overextension. Is it overextend more? Is it gonna go more? So we were talking about it and said, okay, if it breaks pre-market low in an opening drive, we're gonna take a C risk, maybe trail with the 9 EMA, and we can also take profits with the tape. One thing that we liked about Friday was a push into VWAP on the open, and after that we had a flush. So in that case, I think if we see that the buyers try to step in, however they get stepped on, that gives us more conviction, at least in our opinion. So in that sense, we enter with B risk. One thing that I think is a personal preference of mine, I don't know if it's 100% correct, but sometimes I like to enter in two spots. So we have the VWAP continuation. You hit it one time, you see if it actually comes. Then you hit it a second time. I know a lot of traders just hit it once, and maybe that's something for me to experiment about. However, this is something I did in this trade. The target, something we learned with Justin, is trailing, right? So trail with the 2-minute 9 EMA. And we had a lot of tape shifts on the overextension on Friday. They were really easy to catch. Really easy, no, I'm sorry. They were identifiable at the moment. So we thought, okay, I think we can identify these moments and take profits at around a reasonable moment. If it puts in an opening range as well, and we break down with an increasing volume at least twice from the previous bar, we want to enter short as well with 15% of our daily stop, which is B size. For the opening range, we like to take 1/3 at one measured move, and the rest we want to trail the 9 EMA and a bit of discretion on the tape. If we just go up and chop around, we don't want to take the trade. I think it's our thesis is wrong, and we'll go for something else. Before going to the actual trade management, Jeff came up to us and he asked if he wanted to present the gold, and I said, Jeff, sure, I think it's a very interesting trade. However, I don't think I traded well. And Jeff said, yeah, but this is the opportunity for you to review your trade and go for it. I said, okay, I'll go for it. I'll be very honest about it. I really don't think I traded well. However, it was really nice going back.
Well, I just want to, let's rewind the tape.
Yeah, sure.
So you talked about you want to get in for a little bit, but then you want to see some more confirmation to get into a full position. Did I hear you correctly?
Correct.
I think that's a sophisticated entry system. I really like that. I love that you're a bit young in your career and you're already thinking about that. That is, if you ask me, I think that's something that people do who've been trading for 3 to 5 years at a minimum and are professional traders. That's a sophisticated way to do it. I like that approach a lot. I think you get in a little bit, it gives you, when you're in a position, you get a lot of information. You definitely can feel more the buying and the selling when you're in something, even for a little bit, than if you're just watching it. I'll let psychologists ruminate over that. But your information when you're in something is more meaningful than if you're not. It's just the way it is. And then I do want to talk about one important trading principle as well, which is if you trade gold every single day, what is a very likely thing that an active trader will say about gold?
There's no volatility.
Doesn't move. And then if they say it doesn't move, what are they most likely to say next? Can't make any money. And if you can't make any money in it, what were you likely to do?
Never trade gold.
I'll never trade it. I'm taking those tickers off my platform. And I think it's good, certainly, to understand what you trade well and what you trade not so well. And I think it's good for people to say, I'm going to be selective about certain stocks. But what I don't think is a great idea is to just say, I've traded gold on days where it's not really moving that much. I'm just never going to trade it. I think a smarter way to do it, because I don't think we're really ever going to make the people in this room, I don't think we're going to see for a while another really, I don't think you're going to make your trading career trading gold. I'd be surprised. It just really is something. But every so often, it's really damn good. Every so often, particularly when global macro events are more in the news. I mean, could you have a better global macro environment than right now? I mean, it's a headline a minute. It's good now. And so something that can be frustrating in the past, I think a better thing to do is say, I'm only trading it on special days, and I'm only trading it when I see A+ trades, as opposed to writing it all off. And so that'll keep you in the game. And there are traders who made 7 figures who probably have made $100,000 in their whole career trading gold. But on the one day, they crushed it. All right, back to you guys.
All right. So this is a trade management, right? Right at the open, we had the push into VWAP. We're going to go into the tape with Christian. Did a terrific job, and he'll explain a bit more what was happening. So the first entry was in that first rejection out of VWAP. You can even see that it crossed VWAP, then it goes down. We entered a bit below the first candle that rejected. The second entry is on that big candle right around when it crosses the pre-market low. So at that point we were B risk. And I think this point it comes a bit of a mistake and a bit of eagerness to take profits, which is something that Justin really helped me with, is being systematic about it and trying to leave a piece for the run,
Yeah.
So what happened? Right after we entered there, we had a quick flush. So I said, okay, I'm going to take a bit of my position as a momentum scalp. And that was something that I had planned before. However, I didn't really follow my plan, because in the previous overextension, you could really see when it was a capitulation and when it was the move had ended. Like, we were just in the beginning of the move. So I realized that it was a mistake, and it's something that we even have in the review.
Okay, let's go over 2 entries adding up to B risk.
Yeah.
Why are you entering there?
So we had the move up to VWAP. In the tape, you could see the buyers were strong. We had that doji on the top. They tried pushing it over 389. They just couldn't. After that, we had a quick acceleration on the tape, which is the third candle on top, back below VWAP. It had good volume as well. You can see right there is when the
Use the mouse.
increase in
Huge
volume.
Yes.
Yeah, this one. This one is the second entry, which is the biggest volume.
All right, so it's a fail of VWAP entry.
Correct.
You used.
Sorry, go for it.
No. It's your trade.
In my head, it was kind of a VWAP continuation in a sense.
Two-bar break.
Of course, it just opened. However, it was holding below VWAP, and it was one of the first times that it touched it. So it was a fail at VWAP, which could act as resistance. It also failed.
And then your stop is above.
Above the
Yeah,
high,
right
above
above
the high
that.
of the day. The
Yeah,
high of the day.
high of the day.
Okay, good.
Sorry, I forgot to put the.
All right, so using VWAP for your entry, and we're going to go high a day there. Good. That's a nice tight stop.
Yeah.
Okay, and then we've got another, oh, those are eggs. Oh, those are entries, okay.
Yeah, those are the entries, and then there's the exits, right? So what was the plan? We're gonna exit above a close of the 9 EMA and with momentum. However,
I'm sorry, so your first entry is
is
it cannot hold above VWAP. We're going to enter a little bit, and then your second one is, hey,
confirmation.
we're confirming we're holding below VWAP, so now we're really in for our full trade.
Exactly.
Stop there is
Above high of day.
high of day. Okay.
Exactly. And this is a very telling moment. We're gonna watch it.
What's another place you could set your stop as well for that second entry?
Above the high of that consolidation would have been a tighter stop.
I think above VWAP.
Above VWAP highs, above the.
kind of here, right below 388.
Yes. Yes.
I think that's right, because then you can size up as well, and you keep your risk a bit tighter, right?
You
Because
could, yeah.
It shouldn't go back up, right? After this candle here,
I think that's right. I don't think it should go back up.
or else it's gonna
Or else
hit it
it's-
here either way.
Or else you're not really, your signal's not right. You got to wait a little bit more. Yeah.
Question, you mentioned this because of risk management as well as EV wise. So risk management wise that you are tighter on your entry.
Well, you said, I'm getting more confirmation that it's holding below VWAP.
Of course.
And then you want to set your stop below your first entry, which was in for a different reason. So if you're getting in for your full size, because it's clearly holding below VWAP, your stop should be
Just above.
if it trades above VWAP.
Yes, exactly.
That's why I say that.
Okay.
All right.
Thank you, Bill.
Okay, so here comes a bit of what I think I did wrong, but being just objective about it, we got out of 1/3 of our position here. We were in from great prices with a very tight stop. Another one is that we didn't know that this would happen, right? So we started holding this level, consolidating here, and this is a 1 minute chart. You cannot see it on the 2, but we closed above the 2 minute. So one of the rules that I set for myself is, okay, I'll take some off if we close above the 2 minute 9 EMA. However, something that we were talking about with other traders is it's good to have a system.
All right, we got to stop here.
Sorry.
And I give you guys a lot of latitude for how you're going to develop as traders. You can't trade gold for 4 points.
Exactly.
Okay? You can't. You can't trade a $400 stock for 4 points. You can't trade a $400 gold stock for 4 points. That's just not going to work. You've got to have a trade that you're envisioning that has more reward than that for that, or else you're going to cheer yourself up. Does that make sense?
Yes,
Yeah.
total. And that's why we talked about it and said, look, you need to have a system, but you need to have some imagination for it.
Yes.
Like you need to know when to use your system and when to just let it run.
Yes.
And this is just the beginning of the day. It's clearly holding
Yes.
below VWAP. Like
Yeah, what you're saying is, I want to get into this stock because I think it will reverse. I think it's overbought on our technical charts, on our long-term charts. I like the price action in the morning. Now it's holding below VWAP. It was up a bunch. There's a lot of people in this. Like, you got to play for a bigger move, even intraday.
100%. I think one person that did really well was Jackie from Miami. We were trading this together, and she actually added right below
At the break.
on
Just-
this break, which
Beautiful.
was beautiful.
On the 9
So-
EMA there that it holds it.
So at this point, 2/3 of the position.
I think you're holding and adding.
Yeah.
I think you're holding and adding.
At this point, it becomes an A trade. I think when it breaks here, because there's also an increasing volume.
I think there's lots of stocks that you scalp. I think if you've got a stock that's hard to trade, that's messy, I think you kind of have to put that in the category of, and it's a $400 stock for 4 points. I think you got to let it work a little bit.
Yeah. No, 100%.
You're not going to develop a profitable trading strategy in gold if you don't have more reward.
No, it was really frustrating at the end of the day. I talked to Jeff about it. It was one of the reasons that actually I wanted to do the
I'm
play.
frustrated for you watching it.
I know. You don't even know what I wrote in my DRC. But it was a real big learning experience because I saw what this last.
I think if you cover there in your DRC, I hope you like rip the pages with your pen. I hope
It
those.
was a computer, but it's the firm's, it was the firm's computer, so I couldn't.
Is the keyboard still intact?
Yeah, it's still intact.
Okay.
At that point, I had 1/3 of the position, and it was interesting because here there was a bit of holding on the tape. I covered 1/6, and the final part.
But you can see the exit. You can see the real move, and you can see the exit. You can see the capitulation. That's the exit.
That's the exit, and here this exit was actually almost half of the whole P&L for the trade. It was 1/6 of the size.
Yep.
So it was in my DRC. I was like, Thomas, I cannot believe you missed this gold trade. And the worst part is that we were talking, me, Jackie, Jeff, and she said, no, I'm adding here. I was like, oh my gosh, she's adding here. I just took most of my position off. I could add back. However, I think the hesitation and the lack of experience and having that imagination is like, okay, this is not just gonna move here. And it's gonna. I have to accept the risk. If it goes back to my stop and it hits my stop, it's all right. That's it. It's part of it. Or it starts moving up, I can even close the trade, whatever. But it lacked my imagination. Is one of the reasons that I wanted to do this playbook, is to go through it. At the end, we have the review as well, what we could have done better. But this was just clear capitulation, right? So end of the move,
Volume.
biggest volume candle of the day. We're gonna show this moment at the tape as well if there's time. And the quick rebid just, it shows. It was even a long for some people who are courageous enough.
So we're going to take a little look at the tape, and we're going to look at 3 key moments. We're going to look at each of our 2 entries, and then our final
Use the mouse.
final exit. Oh,
People only can
okay.
see.
Use the mouse. We will.
Okay.
Okay, so just stop it just for a second. So here we are. We're at the top here. We've got a little consolidation happening. We're under that 390 key resistance, and we're looking for an entry if we're going to fail these this 2-bar low on the 1 minute chart. We've also got a sort of a pre-market level here from the pre-market that we're keeping an eye on. Okay, go ahead.
Okay.
So we're looking for this 388.5 to break. So we're 388.6, 5, 4, 5, 5, 5, 5, 4, 4, 8, 4, 8, 3. We're in threes, 3, 2. Looking over to the bid to see if it's bringing it. No. Back here, 35, 46, 46, 30. There we go. 4, 3, 3, 2, 15, 18. Now we want to see the bid stepping down. 10, 7, and then we're down under our number. And we actually added, of course, on the break, but we were happy to see that it seems to be working. So that's our first add.
The first entry.
First entry.
First entry. All right.
Okay, and then here the second one is where we get to our full position, and this is on that 2-bar break on the 1 minute chart, and we'll see that on the tape. So we've added first up here, it came down, it's popped. Now we're looking to add below this break if we can get it. So we're at the 387, 386 already, 396, 96, 94, 91, 89, 85, 87, 86, 74, 66, 60, 70, 80, we're not sure, 80, 82, 80, 79, 75, 77, 81, 80, almost there, 68, 55, okay, we're watching
Speeds
it.
up.
Yep, 43, 47, and then we took our entry, but we're happy to see that it's continuing to break down and continues to go lower. And there we get some capitulation.
And if we can, this is the moment where we think is the most interesting of the whole trade, which is actually the capitulation and the rebid.
So we're watching this prior day support from 6 days ago, and we're
We're at the right end of the move, right, Christian?
yeah, we're at the end of the move. We've had a big run down here, so we're starting to think about taking some off, and we probably made this clip a little too long, but
Look at the acceleration, 360.
Yeah. So here we are, 376, 16, 24, 29, 28, 35, 60. We're looking to get under. We're trying to stay above that 376. If we do, we're not sure if this would be the good place to exit. But we're gonna see that it's gonna fail. This is a
The volume here is very telling as well.
big
And look
volume.
at the rebate here,
Mm.
376.80.
Yeah. 89.
Can the sellers push it back again? They try to,
Nope.
but then
Nope.
Yeah.
Bigger orders. Those are good.
376.80,
Yeah,
50,
so
70. After that, we're just gonna get a big acceleration to the upside.
So
And
we're
now-
gonna stop out right here above
No,
this
no.
above this 2 levels if we get there.
That.
It's just skipping 20 cents, 20 cents, 30 cents.
Yeah, it's starting to see 48, 46, 50. We're out. We've seen that it's lifting. It couldn't get below this level. It kept lifting on the tape here. And so we were out when we saw the lifting, and even now 96, and now into the whole dollar and above.
So it was basically a $3 move in 1 minute.
Yeah, so that was, we'd like to try to hold it, but there we had to.
At that moment, we
Yeah.
knew the trade was over, and we exit our last bit. Let's
So trade strategy, we're at 7. We got to work on our exits better on that trade strategy, as we discussed. Risk management, 7, as we discussed. You've got to set the better stop for that second ad, and you definitely should not have covered where you covered.
Yeah.
And then reading the tape, that was excellent. I really like how you went back to the important spots, showed us the tape, showed us what was most important, 9.5. But we're getting tight here, guys, we're getting tight here for the 80 passing grade. We're getting tight. You're gonna need to finish strong. So
My teammates are gonna hang me.
So 3 years ago, we weren't making any money in gold. We took it off our radar, but how could we keep our eye out to make sure that we see it if it pops up again? So let's see. So we looked at the gold chart, and we asked ourselves what kind of things are happening here that we could scan for. So one thing we noticed was that it was up in here. It was further above one of the 9 EMA. So we thought, okay, well, maybe a percentage above an EMA would be a good way to maybe scan. We noticed it had a good long run, a big percentage gain in X number of days. So we thought maybe that's good. We noticed that the day before the capitulation, the range of that candle was bigger than the ranges prior. So an ATR yesterday prior than the days before. We saw there was increasing volume on consecutive days. Boom, boom, boom.
Mm-hmm.
So we looked for maybe increasing volume on consecutive days. And then we also had higher closing prices on multiple consecutive days. So we thought, okay, that's some things we can see. Let's try to build a scanner around that. So this was scans.com. We're not on the desk yet, so we don't get access to the very great tools. Scans is good though, and we built it in here, and we put all the criteria in here. And one of the cool things about Scans is you can click here and toggle some of your variables on and off. So you don't have to have 5 different scans, like one for pre-market or one for the market. You can build one scan and hit a toggle button, and now it's good for pre-market or market hours. So you might look for that kind of a feature in a scanner that you might have. We're gonna first, let's click these ones on that say we're looking for stocks where the price closed higher than the day before 4 consecutive days. And when we do that, then these ones populate here. So, okay, let's also toggle where we get an increasing volume on the last 4 days as well. Let's see what stocks come up there. And then let's look at one, let's toggle this one that says that the ATR on this prior day was much greater by an X% than the day before, and it narrows us down to just one stock that we find. You could go to the next slide. So this is a stock that pulled up just to kind of show how it's working.
Okay.
Now this stock had yeah, low volume, and there's a couple other reasons why we wouldn't probably be trading it. But you can see that the scan that we developed picked up this increases. It picked up the increasing volume. It picked up that the ATR on the day before was greater. And in fact, if you had pulled this up in the morning when you're scanning, you could have maybe taken an entry here below the close of that day and had a little 11-cent move that you could have captured there. No, you wouldn't have traded this one, but this will help you find the ones that you can trade.
It really does, exactly.
So a bit on the trade review. I think we went through a lot, but this was really disappointing in a lot of senses. It was a great opportunity. I think we did a great job in spotting it early. However, the risk management and the exits were simply subpar. So what I think we did well, we spotted the opportunity. We had a good entry at the VWAP rejection. We could manage to see it on the tape. We trailed the stop above the 385 consolidation as well when it broke. I think there would be no reason for it to go back to that price. I think the 3 take profit methods could have made sense, but talking here with Bella, you have to have a bit more of an imagination, right? So what could have done better? The exits were not well executed, right? So there was a fear of losing profits. There was inexperience. So the tape exits at 384 and 381 didn't show the capitulation that we saw at 377. That was clear. And at that moment, it wasn't showing something clear. So even the next slide, after our review here, I disagree with some things that I written. And I think trading is all about humility and admitting that you were wrong and trying to be better the next time. So
is running a firm.
So it's running a firm and making money. So we need to make money as well. I think it was a good entry. It was a good add as well. We could have moved the stop above the prior candle. Even after exiting a part of it above the 90 MA, we should have added back below the close of the consolidation. It's a must. It was as clear as day on the tape, on the price section, on the whole context of the move. So this was, I think, a big mistake and something that for sure I have internalized after analyzing this trade a couple of times. And we should have covered the position almost entirely, at least on the capitulation, if I wanted to use the close of the 2 EMA, 2-minute 90 EMA on the rest there close. But sincerely, all of the positions should have been closed on that capitulation.
And then just to point out a couple things that I think we did really well. I think we were in the right stock for the day, and I think that's really a big deal.
It is.
You can spend. You say it's better to go down the right highway.
Hey, who's teaching this class over there? It is. He's
I
right.
guess I made that.
Stock selection is really good.
Very good.
I agree with that because the 3,000 stocks moving, right? On a
Yeah.
given day. Like, you could have a great stock, but it doesn't go to your trade plan. You didn't really jump on it.
That's
And
right.
The action was somewhere else. I have those days.
Yeah, you're like
I have a
wandering
little
around.
regret. Why am I looking at this stock? This is the one that actually worked. That was not even
Right.
in play,
Right.
right? Fashionable late happening in all these stocks. I feel like I missed out on the trade. So
It's like better to go down the right highway slowly than the wrong highway really, really fast. And then the other thing I think we did really well here was our entries. We picked our initial entries. We had great entries. We had a great EV there because we had tight risk and we could put on good size compared to how close we were to the. And you can see in hindsight the entries were good. And then we did really good holding a piece. We didn't
And then
sell
you
everything. We
held a
didn't
little
sell
piece.
everything.
That's
We
true.
held a piece right till a very, very good exit.
Great
So
job.
I'd like to point out a few of the things we did really well.
Going over your trade review, technology, an 8. I thought that was fine. Trade review, an 8. Can you bring up your trade review slide? So I will share with you what I've seen other people do here, which I think would be helpful for you. The one thing that just sort of leaves me lacking on your trade review is you're not specific enough about why the stock is overextended technically. You know, can you use Bollinger Bands to come up with a system for yourself so that, and I'm just throwing an idea out, can you use Bollinger Bands for yourself to identify stocks for you that are oversold on your longer term charts?
Yeah.
Is that, you want to be more systematic about what oversold means. And you want to start to be creating this database with your playbooks within that system. Does that make sense?
Makes sense.
Okay. So that I think could use a little bit of work. I do think your stock selection is strong here. I do think you do a really great job. I said this before. You do a great job of just savvily talking about where people are in marketplace and what other participants are doing and why that gives you edge in a particular spot. That was really good. And then diligence overall was a 9. Do we have a total? I can't actually do that in my head anymore. 84.5. Let's go. Let's go. I had 85 too. It's 85, right? So you guys needed to get an 80, which is good enough. And you got an 85, so congrats.
Thank you.
Thank you,
Good
Bella,
work,
for
boys.
the, you know, I'm from Brazil. I love barbecues, but we got a bit grilled on the trade management. However, it's the grill that makes you actually grow, and I feel that we come out of this better traders. So
Yeah.
it's good to look at the mistakes and see as well not perfect trades. Of course, I'd rather make more money in that trade, but
Right.
it was very good. I feel happy.
I feel very happy, very proud for all the teamwork, and I have to say that every day is a school day. We keep on learning. We are on a journey, on a path of on our trading journey, and this kind of reviews definitely gives us a bit of time to retrospect the things that we could have done better and we could have improved on our own. At the same time, we should not undermine the heat of the moment or maybe the excitement and the feelings, and that's why by having this kind of more systematic approach we can actually exclude or diminish a bit the emotions that come up during the trades and trade in the best possible way, and as like our professors or our teammates or the good advice that we have received during all this course become the best version of ourselves. So that's what I think.
Yeah. I think it was an incredible opportunity to practice this really important skill and to learn about it, and even have the one who wrote the book in the room, being the one to put us on the grill.
It's a pleasure.
So it's really an honor to be here, and really, if anyone gets a chance, take it, because it's an incredible opportunity.